What's going on, y'all? How's your weekend? What's up, Dylan? Ready for this week? Pierre, James, Robert. What's up, Tiara? Terrence, Robert. Anthony, what's good, guys? Yeah, we're gonna start this in a few. If you got questions so far, you could ask right now if you choose. Get it started. Give it like another 2 to 3 minutes, then I get the weekly prep started. I have a question. What would you do if you started from zero? What is the advice that you would give little brother started trading? What to focus on in trading? What to do? What to avoid in terms of macro fundamentals? I mean, if you're like starting from zero, learning fundamentals, man, like tell you the truth, I wish I was able to join a community that I have. That's one of the reasons why I created it, just so that you don't have to start alone by yourself, right? It took me about like 8 years to actually finally get it down pack. So that could cut your time in half is one of the reasons why I created it. But like I did in a previous, what I did in a previous YouTube, I did a video about it before.
Recording in
I
progress.
did before about letting go of all the bad habits that I learned from other influencers and stuff that I noticed that it wasn't helping me. I had to let that go and start trading with understanding and using fundamentals as a bias to look for trades instead of just focusing on price action alone. So I had to actually make that transition. Starting from like $0, like that's just like one of the hardest thing you could do. I recommend just like try to get a job, right? Try to put some money in your pocket, build your character, build yourself inside out, and then in the meantime still focus on trading, because you're going to be very gullible to everything in the beginning. You get what I mean? Like everybody's going to be very influential. It seems like everybody's advice works. So that's why you got to build yourself first, and then you're going to be able to separate, who's real and who's not. But yeah, like you could just join the private group, you get the course when you become a private member as well, and everything you need to learn with fundamentals is there. Not a whole lot happy to be here this week. Felt like a great trading week. Yeah, last week was pretty good. I felt like a lot of people did very well last week. I felt like it was pretty easy. Yeah, I definitely felt like last week was really easy, real smooth. I have an open buy position in gold. Shall I mean, it depends where, but I know some people just be like buying and selling at market open. All right, guys, let's get it started. All right, so we're going to cover just a weekly prep on what to focus on for this week so you could get the best tradable opportunities. All right, so we do have the Reserve Bank of Australia's rate decision coming up. That's going to be later, a late Asian session around 11:30 p.m. Eastern. You're up for it. I think this one could lead to some good tradable opportunities, but I think it's just going to be more focused on forward guidance. Okay, so if you guys like to trade AUD, this is going to be the perfect event for this, right? So now we're going to focus here. Let me just get this straight. One sec, guys. So for the rate decision, those that don't know, hold means that they're going to leave rates as expected. Okay, why this decision matters? Because the RBA has their target between 2 to 3% inflation. So high risk, higher inflation is going to lead to the RBA possibility of pausing rates. But when I say a hawkish pause, like usually when we mention hawkish, it would lead to them wanting to hike interest rates. But all the central banks now in this current position, they're not likely to hike rates, right? They're going to leave rates where they are. And that would still give strength to a currency. So hawkish risk if the RBA is expecting inflation to still be higher. Dovish risk, if they see that growth is slowing, that would lean more to additional rate cuts. Okay. So the key data from the last rate decision, this is why, just to answer your question, this is why focusing on economic data is extremely important and journaling it. Okay. One sec, guys. All right. Should be able to hear me. So when it comes down to inflation data for the RBA for Australia, all right, we can see that inflation is still sticky as it's still hovering above 3%. That's not exactly what they want in order to start leaning towards a dovish cycle. Okay, so this is why last week AUD was really a great pair to trade. Like, good job for you guys to take advantage of it. Labor market slightly cooling, but the labor market still is tight, right? And when it comes to retail sales, we are seeing a little more pressure for consumers. China PMI data is pretty mixed. This is for you guys that don't know intermarket analysis, right? China and Australia is very strong trade partners. Okay, so when China is dealing with a lot of downside, weaker growth, very bad when it comes to our economy, it could impact Australia as well. Okay, so PMI data being so hurt AUD currency as well. But if stimulus is coming into play, that could also strengthen the AUD currency if China brings in stimulus, right? So this is just to give you guys a little reference on what to focus on. Now the central banks for the RBA. Last meeting, they said inflation was still above the target, but the economy was slowing. They're most likely going to stay in that same tone because inflation was higher. So we're probably going to see another hawkish pause again, right? Which is going to lead to AUD strength for this actual meeting. Okay, so that's where I think the best opportunity for this, we're going to see probably the same expectations. We can see that the markets are already pricing in for this hold. COT reports is already leaning more towards longs in AUD currency. So that's pretty much what's going to really give us an edge. All right, guys. I don't see anything so far that leads for us to be looking to short AUD other than a risk off market. So I like the idea of a stronger AUD moving forward. All right, guys. So now, like the hawkish hold scenario, if they still signal that inflation is still sticky, that's just going to lead to AUD strength. Hawkish surprise, right? If they give us more urgency, more fear on higher inflation that they need to actually do something about it, that's when AUD is just going to take off. All right. So that's what more I'm leaning to. If we get a dovish expectation, like if they're shifting more dovish, mentioning more rate cuts, which I highly doubt, but if they do that, that would weaken the AUD currency. But that's not typically what I want to pay attention to. I want us to focus on, I think AUD strength is going to be the best opportunity. I don't know if any of you guys took advantage of those buys, but that's something that I was leaning into that we took advantage of last week for Asian session was AUD strength. So now this is going to lead towards that rate decision. I think it's going to be a really good trade. So hopefully we could get opportunity of that. Now, moving forward. Okay, guys. So when it comes to AUD, hopefully that makes sense to you guys. And we do focus on this live as well. So you don't have to be alone. I'm definitely here to guide you guys. But now we have NFP. So every first Friday of every month, all right, we're going to get NFP data. Very, very big print, especially with all of this stuff that is going on with the markets, right? This print, I think, is going to be extremely important because it's going to impact what's going to lead towards quarter four when it comes to economic data, right? It's going to impact quarter four interest rates, okay? So this Friday, 8:30 a.m. Eastern time, that's when the data is going to come out. But it's not just only the NFP print. We have to focus on unemployment and we're going to have to focus on earnings as well. All right. They all have to give us a direction. That's how we're going to be able to take advantage of the best trade. Why this matters, right? So the Feds, they focusing more on the labor markets to guide their rate decisions, right? Tighter jobs, meaning if the jobs are still strong, it's going to be a hawkish Fed. Softer jobs, it's going to lead towards a dovish Fed if the job markets is actually weakening, all right? Wage link. Wages drive service inflation, strong earnings, sticky inflation. So this is why I said earnings is going to be important too, because it's inflationary. So that's going to show if inflation is rising or inflation is pushing lower. So if NFP is higher, we want to see if earnings is higher too. That's the best tradable opportunity. Or if NFP is lower, we want earnings to be lower as well. All right, guys. So NFP is going to set the tone for the US dollar, the yields. If you guys are trading gold or equities, this is what's going to be a huge impact. But caveat, right? Something extra that not a lot of people talk about is risk sentiment also. If NFP data is extremely bad, right? Like extremely bad, that could lead for a recessionary reaction, right? So that's if this week's NFP numbers is just the worst that we have ever seen. Now you're going to know, because when you see the data, you're going to be like, holy crap, right? If that happens, that could lead towards a risk off market. All right. But on Friday, I will give you guys more context on what to focus on. So previous NFP was softer than expected and unemployment did tick up higher, right? Recent data so far, we see jobless claims is actually getting a little stronger, but job openings is trending lower, with ISM employment is also showing softness. But the Fed's stance is still data dependent, right? And that's most likely because they're still a little cautious, they were saying, about inflation temporarily coming in higher. But the labor market, they want to see more softening in the labor markets before they actually make a decision. All right. So that's why this is going to be so important this week, because this is what's going to impact the rate decision, the next rate decision that's coming. Make sense, guys? Just put a 1 if that makes sense so far. If you're confused, now ask a question. So expectations for, scenarios. If we get strong job numbers, which is strong NFP, strong wages, right? That's going to lead to dollar strength, right? Higher wages, right? Higher inflation. That's going to make the Feds stay with the hawkish pause stance. So that's going to strengthen the dollar. That's going to most likely push equities lower, and we're going to see gold go lower if we get strong numbers, all right? If we get weaker numbers, weaker NFP, unemployment is rising, we see wages is pushing lower, that's going to lead to dollar weakness, as that's going to increase the odds that the Feds is going to likely cut rates more aggressively. All right. Then that's going to strengthen the equity markets. That is also going to strengthen gold. Does that make sense, guys? Make sure you put that in your notes. Okay. So when you're looking at the data, you're not caught by surprise. All right. So this is what it, like, just to answer your question. I don't even know how to say your name, Brothers. Like, this is how you could imply fundamentals to trades. First, you have to understand the direction. Where if data comes out one way, how would the markets react? If the data comes out another way, how would the markets react? Okay, so nothing is random. All right, give you guys some time. Make sense, guys? All right, so now just moving towards earnings. Nothing major for this week when it comes to earnings, but moving forward. But weekend news. I thought this was exciting, right? But not in a it's crazy. But hold on. Sorry to cut you off. Sorry, but do you think you have time to upload ASAP? When do you have time? Yeah. I'm gonna upload this after I'm done. I got you, James. Don't worry about it. But we can see that Russia has breached NATO's airspace. So we're seeing conflict right now between Russia and NATO. So if this continues to escalate, I think obviously the U.S. is going to get involved too. They are a part of it with Euro, NATO going against Russia. So we've been seeing that supposedly Russia has put out an attack and Russia now is denying it. So this is what's going to be the focus moving forward with headlines. Because if we see NATO and Russia get into war, most likely China is going to get involved too. Is North Korea as well, right? North or South? I think it's North Korea. But this is what's going to lead towards a risk-off market. Geopolitical tensions is going to be a huge impact. So we're going to have to focus more on these headlines regarding NATO and Russia. So if we see things actually continue to escalate, guys, this is what's going to lead to those gold buys, right? This is why gold is literally just one-sided, right? Especially with these geopolitical tensions going on. If things continue to escalate, it doesn't seem like things are getting any better. But if things continue to act this way, we're going to most likely see gold continue to spike higher. All right. So focus on these headlines. This is why I put this here, because I want us to actually focus on this moving forward. All right. But that's going to be pretty crazy if these things actually do happen. I'll answer some of your questions. Been trying to learn fundamentals with my trading, but what's the best? Join the private group, Fresh. The link is in the bio. It's the best way. Just join the private group. Yeah, because like everything is here. Like when it comes down to this, show you guys, right? Because when you want to learn fundamentals, like you're gonna get access to the course, right? You're going to have all the educational videos that you need to just help you understand how to trade economic data. Plus, you're going to be trading it live with me. So every day we trade economic data. I give you ideas, and then you just journal, you take notes, and that's how you're going to get better. So the more active you are, right, the market updates tab, every time something happens, you're going to be updated. You understanding why the moves are happening. And we're just repeating the same process every single day. So that's really how you're going to get better at understanding fundamentals and trading it. So at first, when you're trading data, right, it's going to be hard, right, because the moves are going to be very fast. But the more you put time into it, eventually you're going to start having an edge. You're going to start understanding like what data to pay attention to, wait for the breaks of structure, and all of that stuff, and etc. It takes time, but this is the right path to start. All right. Like any questions though so far with the weekly prep, right? Because now we're gonna go over. Lastly, let's go over the economic calendar, because now you guys going to be focusing on what events is going to be important other than the main ones. So Monday we don't have anything major, but we are supposed to have, Trump is supposed to have actual meetings today. I believe it's Monday and Tuesday. So news headlines is going to be important for Monday. Pay attention to those news headlines, and also focus on technicals is going to be the main focus. Okay, Tuesday, that's where we're going to have the rate decision along with UK GDP data. So I'm going to be focusing on GDP. I think if we do get a higher print, I think that's what's going to lead to more continuations of a stronger pound. Already, we've been seeing a hawkish Bank of England because of sticky inflation that they're dealing with. So if we do get a higher GDP, I think that would lead to more strength. But I want to start seeing the downturn when it comes to the United Kingdom. I want us to be able to start taking advantage of some shorts, right? Because they're not going to hike rates. So the best longer term edge would be looking for shorts for the UK. Okay, but this could be a start. If we get a miss in GDP, that could actually be a start in looking for the United Kingdom's downturn. So Tuesday is where the labor data is going to start for the US. So jobless claim, JOLTS job openings, and then we have consumer confidence. So Tuesday is where it's going to start, where we can start looking for an edge, all right, for trading economic data heading towards that Friday. That's what we're going to be definitely focusing on. Wednesday, London session, we're going to have the Euro PMI, HICP for Euro. This is just their inflation data. All right. So London session on Wednesday is going to be important. Along with New York session, ADP employment is also a big event to focus on. All right. Because typically you like whatever ADP goes to, they like to use that expectation of what direction NFP is going to be. So, but just trade it as it is and just look for the best edge that you could take. All right. But that's what's going to be a really good one. That's going to be on Wednesday. Thursday, we got Swiss inflation. Haven't been really focused trading the Swiss franc, so I'm going to leave that alone. But New York session is where we're going to have initial jobless claims, all right? So, and then ending on that Friday, as you guys can see, is going to be that NFP data. But just remember, because when you're looking at the free economic calendar sites, they're only showing you just NFP numbers, right? And you're only getting the forecast and the previous. But in order to catch the best edge, you need to look at the data for everything else. It has to be earnings. You have to focus on NFP, unemployment as well. Okay. And then later we do have PMI, but the focus is just going to be on that bulk of data, that bulk of information. So that's why I'm going to be looking for an edge. Hopefully this week is a really good week for you guys. All right. So definitely look into that. Now we can look at some trade ideas as well for gold, because we're going to start. Yeah, it's already market open, but nothing crazy happened over the weekend. So just try to be a little more cautious with trades that you're taking, guys. I know somebody, because I can already tell that probably somebody already bought gold at this break of structure. Like this was good yesterday. This was an easy trade yesterday, but we are already seeing a range form. And what we need to focus on before you make that decision is what the dollar is going to do. First of all, I like dollar sells from a macro perspective. And this was the area of interest, like you guys in the chat. Yeah, you took my bad. I met it last week. But this was the area of interest I was telling you guys about, right? Wanted to see dollar push back towards this high, right? Because now we could probably, if dollar starts breaking above this zone, then technically I would say that this would have to be because strong growth data this week. Okay. But I think this is a really good pullback zone where we can start looking for additional shorts. Okay. Start looking for those sell opportunities to come in place. If we could see like a technical hold, probably in the lower time frames, if we could start respecting this area below 98.500, I want to see if we could get some additional downside, probably heading towards Friday. I mean, maybe Friday could continue to push us even lower if we do get weaker numbers, because like, even though that they're data dependent, I still think that the labor markets is easing to a way where we should be still expecting a dovish Fed. So that's more likely why I'm very excited about this, because it's better to start looking for shorts when we get those pullbacks, right? Because just look at the past, like every single time we get a pullback at this zone, look what the dollar does. It just give us better sell opportunities, right? That we could see from the past. So it's a higher probability that we could start pushing lower as long as things continue to remain the same. So now the fact that we're expecting weaker dollar, this is what's going to give us better opportunities for USD JPY sells, most likely Euro USD buys and GU buys. Okay. So focusing on US data this week going to be important. Even AUD USD, right? If we're expecting more of a hawkish Reserve Bank of Australia, this is probably what's going to lead to better buys trading in AUD USD, just because we got two central banks actually divergence that's coming in place. So we got a dovish Federal Reserve, and then now if we could get more of a hawkish RBA, this is what's going to lead to a really good direction when it comes to AUD. All right, so hopefully we could get that. But this is what's going to lead me to wanting to take buys in this pair. So if I'm expecting weaker dollar again, that's what's going to be good for USD JPY sells and GU, EU, and AU buys. All right. So I'm gonna do like price zones later, probably tomorrow. Just let the markets do its thing first. Let's see if we could get a little bit of a range at this zone, and I will give you guys some trade ideas most likely tomorrow. All right. But as of now, it's just going to be a weekly prep. So I just want to keep it strictly on that, so you guys could just listen, understand what to pay attention to, and start moving forward with. But again, when it comes to trading later in the day, usually like 9 p.m., we could get some volume coming in for the dollar. But for gold, if we could see gold break above 37.90. Set that as an alert just in case, right? Especially if we start having weaker dollar and weaker yields, that could lead gold to additional upside, right? That could lead to a really good opportunity for gold pushing higher. All right. If we could see more weaker dollar, weaker yields, along if we could see NATO tensions with Russia is escalating, that's going to lead to those better buys. I would say safer sells is most likely going to be below 37,200. Yeah, hold on. Yeah, so we could see below support 37,200. That would probably be a good support zone. But I know your price points is going to be different, so just look at market structure. Okay, for your area, this is the 30-minute on gold, but just set those alerts. If we could get a range that's forming here, probably around 9 p.m. And then once we start breaking below that 37,500 area, that could probably be a good scalp sell that you could take to support. All right. That's if we could range here. All right. And I like the idea of gold buys because I still see a macro expectation for dollar sells. So I don't like the idea of buying golds at the highs. If you want to be a lot more safer, let gold pull back. Let's see if we could start holding this zone around 37,200, then start looking for additional upside as long as we get weaker dollar still in place. Plus, if we can see that Russia and NATO tensions is actually escalating. All right, guys. Yeah, like I'll do something on Wednesdays for these guys. Definitely. Yeah, it's a 30-minute time frame. Yeah, because like usually the price points could be different. But usually, yeah, I'm not gonna make this more of a technical, just more of a weekly prep. I'll go more into depth with that probably later on, probably Monday. I think Monday is more time there on Monday, so I'll go more into depth with that. But as you can just see here, you could look at the 4 hour, you could just see the key zones, right? That's why I said just set those alerts. A key area support is going to be at 37.30, and then a key area resistance you could just see here is at 37.90. All right, but if you look at the 4 hour, the price zones should pretty much match up with y'all's too. Yeah, GJ. Yeah, I like market structure when it comes to GJ, but yeah, last week is like, look, this is choppy as hell. Yeah, so that's why you gotta actually, yeah, it's very shit, man. But still, like I like the buys when it comes to the pound still, but I think waiting until GDP for the UK is what's probably going to give us more of a macro perspective for the pound. Because GJ, like overall, just from a fundamental perspective, is just going to buy because interest rates for the United Kingdom is higher than the Bank of Japan's, right? It's higher than Japan. We didn't have that much of a hawkish Bank of Japan rate decision last week. So I still like the idea of buys when it comes to this pair overall, but I'm still neutral with the pound right now because we just don't have an edge. So this is why I'm going to wait until GDP, because me being neutral, that GDP data could now give me a macro bias where I could be looking for actual strength in the pound or weakness. That's what's going to set up for what we're going to be looking for GJ, right? But as of now, just focus on technicals, right? Usually, like market structure for GJ is like really, really smooth. You know, like you could just see the ranges that forms here. And then once we just start breaking above resistance, that'll just give you a higher probability we're going to push in that direction. All right. But sells, like, I'll just let price action is very choppy here. So I'll just let more candle formations to develop before you take a trade. Thanks, JP. Glad you like it. All right, guys. Have a good one. And I'll see you guys. through the S&P. Yeah, I'm gonna do that later on, Marzir. I'm gonna do another video. We're gonna walk through everything else, but this was just a weekly prep. All right. So the Sundays is the weekly prep. I'm gonna go through like pairs and trade ideas later on, but this is just to get you guys understanding what to focus on. So if you missed it, S&P, it's the same thing with equity. So I'm saying equities, it means S&P as well, NASDAQ or US 30. So that's usually for what I was talking about with NFP data.